Is the Kelowna real estate market finally finding its floor, or are we looking at a burning situation for sellers? It's March 2026 and the data just came in. While the headlines are screaming one thing, my boots on the ground are saying a much more nuanced story. If you're waiting for the perfect time to move, you need to see this. I'm Artem Bydlevsky, and this is your Kelowna Market Update. In this video, I will be addressing the elephant in the room as the tensions soar in the Middle East. I'll be going over our local numbers. I'll mention the best and worst performing segments in the city and discuss how the new BC budget and local politics are affecting real estate. With the escalating conflict between US and Iran, as we speak, oil is surging, and global markets, they're jittery. How does a war halfway across the world affect a townhouse in Rutland or a condo in Glenmore? 2 words: safe haven. While the stock market is seeing a rotation out of tech, real estate in a stable market like Kelowna often becomes the gold of the 21st century. I'm seeing investors look at the Okanagan not just for the lifestyle, but as a place to park capital in an increasingly volatile world. However, keep an eye out on the Bank of Canada. If this conflict keeps oil over $100 per barrel, inflation won't drop as fast as we hoped, which means those lower mortgage rates everyone is waiting for might stay just out of reach for a few more months. My advice: don't time global geopolitics. Time local opportunity. Let's soar over Kelowna and take a bird's eye view. Right now, we are firmly in a buyer's market. We are sitting at over 10 months of inventory for the region. To put that in perspective, anything over 6 months is a buyer's market. Over the last 2 years, buyers have had more choice than they've had in a decade. But they still are hesitating, and they're not getting off that fence quite yet. The spring awakening is here. I've timed several of my listings to go live a week prior to spring break, as they're geared towards the out-of-town buyer from Vancouver, Alberta, Toronto, and other families which will have time to check out the new listings during spring break. I expect other agents to do the same, so expect a huge surge of inventory these coming weeks. Now, for the good, the bad, and the condos. Not all properties are created equal in 2026. Single-family homes, which has proven to be our most resilient sector, had a slight decrease month over month of 0.4% and down 0.9% for the year. That brings the HPI price of $1,066,000. Single-family homes are holding strong, but the gap between the sectors is widening. I expect this trend to continue, although at a slower pace. Townhomes have had the biggest hit within the last year, down a total of 8.1%, and it slid 1.1% over the last month. And the condo glut continues. This is where things get interesting, though. Condos erased all of their month-over-month gains, proving January was an outlier. They wiped the 7% gain of January by dropping a 6.5% this month and down a total of 7.3% in the last year. There is good news, though. The 12 different strata complexes that were built strategically to support short-term rentals are in the late stages of finalizing strata votes and approvals from the city to enter back into the short-term rental pool. The ink is wet at City Hall to stamp the business licenses as soon as the province gives Kelowna the exemption to open up for business and finally let our economy flourish. But this is politics, and I feel that NDPs will hesitate to give our very vocal Honorable MLA Gavin Dew a win. If I were to guess, I expect the restrictions to be lifted in late June, just in time for the BC Lions games hosted at the Apple Bowl. Now, we do have to talk about the BC budget released at February 17th. Here are the 3 things that I think will impact Kelowna's market. The speculation tax. The rate for foreign owners jumped to 3%, and vacant homes of Canadian residents that keep their homes empty for the majority of the year goes up to 1% of their assessed values. That's an additional $10,000 in tax to those that have their condos sitting on the market and refuse to put a tenant inside. There will be also an extra luxury squeeze for homes valued over $3 million, and that's going towards schools. And lastly, an increase to construction costs in the form of PSD expanding to several real estate services like accounting, property management, and architectural fees starting in November. This means building a new homes will get more expensive. But the positive spin? This might actually protect your home value in the long run because supply will eventually dry up as it becomes more expensive to build. So what's the move? Should you buy? Should you sell? Here are my Coles notes from today and the research I've done over the last week. Numbers favor the downsizer. With the spreads between single family and stratas widening, the bad news is actually for those moving up. As I still see this trend continuing, and if this is the case, time is not on your side. So I don't see a point of waiting another year to make a move. I would expect the 12 condo buildings that will allow short-term rentals to turn their free fall around as investors regain confidence and try to front-run the opening of the market. I already see great value in the higher-end condos. That's $800K and up. These are designed for the end user, and it's hard to say no to a stress-free lifestyle, the lake views, and the beautiful amenities. With 37 cranes currently up within the air in the city of Kelowna, more and more purpose-built rentals are coming online. Investors will continue to shy away from investment condos as I see rental rates dropping with more rental supply hitting the market soon. I'd also like to point out, while going over the figures, I noticed West Kelowna outperformed Kelowna, with Lakeview Heights up 6.3% month over month, and Glen Rosa up 7.3% in the single-family sector. Glenmore condos took a beating, down 8.4% on the month. So, for buyers, you have the leverage. Take your time with due diligence. Don't be afraid to offer under asking price for condos or properties that have been on the market for a real days of market over 80 days. For sellers, the hope and pray strategy is dead. If you're not priced accurately and staged, you're going to sit. Buyers in 2026 are analytical. They're not emotional. And just one more final note. The early movers and speculators are coming back. They're front-running the short-term rental market. I even have investors changing strategies right now. Instead of selling, they're pulling their listings and are now looking to buy. I even see builders of larger projects, they're not stratifying their complexes anymore, but they're going to convert them into purpose-built rentals. What this means is less homes available for individual owners and more competition for buyers in the long run.